I broke one of the golden rules of personal finance when I took out a loan to invest.
It's stupid on steroids.
However, I am guaranteed profit on this entire process. Today, I'll be sharing how I'm doing this.
Cha-ching.
First off, a disclaimer. This strategy isn't so easy to replicate just because you won't get this kind of offer every single day. However, I do think that this serves as a good example of how not all loans are bad and how an individual can utilize loans to really supercharge their returns. First off, a bit of backstory. In the middle of June, I got a new credit card from RHB because I was shopping for a new credit card anyway, and this one really suited my spending habits. Cashback on this card is actually decent if you can hit the minimum spend of 2,500 ringgit every single month. If you're interested in applying, check out the link below. Ringgit Plus might have some offers and promos ongoing as well. Anyway, back to the topic. After I received my card, I got a brochure where I could scan the QR code, and I found out that new credit card holders on RHB were actually eligible for an offer where you could get a loan for 0% interest that will be taken from your credit card limit. Now, low interest rate loans are good. I've said this consistently. Example of this is PTPTN. We don't have to rush and pay it off. A 0% loan, to me, that's a no-brainer. So I wanted to make sure that I could take advantage of this offer from RHB. So I reached out to this lady who was helping me with my credit card application process to inquire more about this offer. They told me that I could take up to 30,000 ringgit in loans, and my credit card limit that they offered me was 30,000 ringgit anyway. However, I didn't want to take up the entire amount because I did still have to save a bit of my limit for my actual spending, so I ended up deciding on a 24,000 ringgit loan. It actually got approved within the same day, and within the next business day, the money landed into my Maybank account. This is a 12-month loan, and since there isn't any interest or fees associated with it, I'll be paying 2,000 ringgit a month for 12 months, and that will be a total repayment of 24,000 ringgit. Exactly the same amount as I took out in loans. Now that I've got this cash sitting in my Maybank account, what do I do with it and how can I maximize my returns? Since this is not my own money, at the end of the day, it is still a loan and I'll have to eventually pay it back. I ain't gonna take any risk with it, so I didn't want to invest into any volatile assets. This ruled out any investments into stuff like equities, commodities, or crypto. This part, in my opinion, is extremely crucial. Unless you're a professional investor or trader, I would highly discourage using borrowed money to invest or trade in the stock markets. Since those are out of the question, I had to look for alternatives. Well, the good news is money market funds right now are paying juicy returns just because interest rates have been higher globally, including Malaysia. I decided to go with Stashaway Simple. No real reason for that, it's just that I didn't have any money there, so it's easy to completely separate this fund out. They're now giving us 4.1% interest on our cash deposited into Stashaway Simple, which is good considering there's no price volatility. If you want to sign up for Stashaway, click our link down below and you'll get a discount on your fees for the first 6 months. Some of you may be wondering why I didn't choose to go for ASB instead. ASB is a good option. It does give us higher returns than Stashaway Simple, but there are some issues with using ASB. The first thing is, ASB actually uses the lowest balance in any particular month to calculate your returns. This would mean we'll miss out on some of the returns, especially since we're withdrawing every single month. Another reason is that I wouldn't be able to withdraw 2,000 ringgit from ASB online every month since they have a cap, and it would mean that I have to go to a bank, and being a millennial, I'm not going to go to a physical bank every single month. Now, on the part of repaying the loan. Moving forward, I will be withdrawing 2,000 ringgit every single month from my Stashaway Simple to pay off this loan. This will come in the form of my credit card statement. They will just add 2,000 ringgit every single month. Like I said, since this is going to happen every month for the next 12 months, I would prefer something that, I can do completely digitally, and Stashaway offers that. So I've gone through all this hassle. Well, it's not really a hassle. I went through some steps, but how much will I make in total? Assuming that 1. Stashaway Simple maintains their 4.1% interest rate over the next 12 months, and 2. That my math can be trusted, I will be netting a total of 547 ringgit. I know it's nothing crazy, it's not going to change my life, but hey, at the end of the day, there was not much effort involved. I just had to apply for the loan, deposit into Stashaway Simple, withdraw it every single month to pay it back. There's also very low risk. I can't actually think of a scenario where I would lose money, unless maybe Stashaway shuts down or something like that, but that's not something that we're discussing today. Doing this entire exercise also won't impact my cash flow in any way whatsoever. I got the money from them, I put it into Stashaway Simple. Before my statement date of my credit card, I'll just withdraw from Stashaway Simple and pay it back. All this while my cash is generating returns where I will get 4.1% annually and it will be prorated every single month. So how can you benefit from something like this? While you won't get offered a 0% interest rate loan every single day, the concept actually works similarly in other aspects of our lives. Technically speaking, any loan right now that charges you less than 4% can be taken and applied with a similar concept and you can generate good returns. However, the higher the interest rate of your loan, the more risky this move is, just because Stashaway Simple and all the other money market funds can reduce their interest rates at any given time. If Bank Negara, for example, decides to cut rates, then for sure, all the returns from money market funds will also follow suit. But if you wanted to do something like this, then you will have to be extremely disciplined with managing your money, because having an extra $20,000, $30,000 in your bank account, it can make you tempted to splurge it on something else instead. The last thing we want is, instead of going into Stashaway Simple, this money goes into Shopee. If you don't trust yourself to handle your money responsibly, then that's fine, but I would highly encourage you to just not take on these kind of loans and make these kind of moves. Another way of looking at this is by looking at the loans that you currently have. For example, for those of us who have a PTPTN loan like myself, they charge us a 1% interest rate on our balance. Instead of rushing and trying to pay off this amount quickly, we can just pay the normal monthly installments, because at the end of the day, paying 1% interest on a loan is a pretty good deal. It's similar in concept with what I just did with RHB. It's just that instead of 0%, it's 1%, and instead of taking out a loan, it's not rushing to pay it off. For those of you who feel responsible enough and want to take on the RHB 0% interest loan as well, it seems like this offer is standing until the end of this year. I've linked down below, in my opinion, what the best RHB credit card is. It's the one that I'm currently using. So, all of this shows how loans aren't inherently bad. At the end of the day, loans, like many other things, are just a tool for us to use, but the outcome of it will really just depend on how we use it. If you don't trust yourself to be disciplined enough with money at this point, then it's best to stay away from loans. However, once you get to that stage where you can be very disciplined with your money, loans can be an incredible tool to help us get to our financial goals quicker. Another example of this in practice is ASB financing. Yes, maybe in recent years it's not as good just because interest rates are higher and ASB returns are lower, but in principle, that is how it should be working. Anyway, thanks for watching this video to the end, guys. We really hope that you guys learned something from this, learned about how loans are not bad, they're just merely tools. Give us a huge thumbs up if you enjoyed it and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.